Welcome back to another explainer. All right, let's talk about Intel. For decades, they were literally the undisputed king of semiconductors. But lately, it kind of felt like they were completely losing ground to mobile and this massive AI revolution we're living through. Well, scratch that, because fast forward to 2026, and Intel is staging what might be one of the most remarkable corporate comebacks in history. Today, we're unpacking exactly how they're pulling it off, and it's all driven by this historic financial move to fund an incredibly aggressive AI push. Okay, let's dive into this. $20 billion. That is the size of Intel's public stock offering announced in August of 2026. Now, what makes this figure so staggering isn't just the sheer gravity of raising that much capital, it's the history behind it. Get this. This is Intel's very first public stock offering since its original IPO over 50 years ago, all the way back in 1971. So you've got to ask yourself, why is Intel making its biggest financial move since 1971? I mean, what drove a legacy tech giant to suddenly need a war chest this massive at this exact moment in time? Well, the answer comes down to one absolute non-negotiable necessity. They desperately need to expand manufacturing capacity to meet an unprecedented global demand for artificial intelligence. They are betting everything, the whole shebang, on the future of AI computing, and doing that requires a ton of cash. And let me tell you, the market was absolutely ravenous for the strategy. Intel initially targeted a $15 billion offering, but the demand from investors was just so overwhelming that just one day later, literally 24 hours, they were forced to upsize the offering to an astonishing $20 billion. That's a $5 billion increase practically overnight. It is a massive signal of market belief in this turnaround. So let's break down exactly how this offering works structurally. We're looking at just over 210 million shares, priced at $95 each. Now, with underwriters like JP Morgan, Goldman Sachs, Morgan Stanley, and Citigroup holding a 30-day option for about 31.5 million extra shares, this whole thing could potentially reach a gross value of around $23 billion. When the dust settles, that yields roughly $19.7 billion in net proceeds, and every single penny is earmarked entirely to fuel their AI manufacturing capabilities. And this brilliantly illustrates the reality of Intel's financial journey up to this point. Russ Mould, who's the investment director at AJ Bell, really hit the nail on the head. He pointed out that as a highly capital-intensive business that had previously gone a long way in wrecking its own balance sheet, it makes perfect sense to raise this money right now, especially when you consider they've seen a five-fold increase in their stock price since last August. Repairing that balance sheet while keeping their investment-grade rating intact was a critical prerequisite for this massive AI push. Moving on to Section 1, the AI revenue catalyst and the financial turnaround. To truly understand this historic $20 billion raise, we have to look at the massive tech spending on AI infrastructure that actually put Intel right back in the driver's seat. Check this out. In the second quarter of 2026, Intel hit $16.1 billion in revenue. That is their fastest growth in 15 years. They posted gross margins at nearly 42%, along with $7 billion in operating cash flow. And you know what's driving all this incredible growth? It's fueled entirely by unprecedented customer investment in physical AI. By that, I mean the purpose-built silicon, the advanced packaging, and the external wafer production that is literally powering massive AI models all around the world. And Wall Street's reaction to this revenue catalyst? Absolutely explosive. Driven by those phenomenal numbers, Intel's stock just surged over 160% in 2026. At one point, it even reached an all-time intraday high of $142.35. So they weren't just growing, they were actively outperforming their fiercest rivals, AMD and NVIDIA, as well as the broader Philadelphia Semiconductor Index. I mean, we're talking about a complete, total shift in market dominance here. All right, that brings us to Section 2, funding global AI factories, focusing on global infrastructure. So with $20 billion fresh in the bank, where is all this newly raised money actually going? The short answer, hardcore physical infrastructure. The sheer scale of this spending is just staggering. So the crucial point is that in July of 2026, Intel raised its full-year capital expenditure forecast from $18 billion to more than $20 billion. They're putting those newly raised funds to work immediately, and management has already signaled that spending in 2027 is going to be significantly higher. They are literally pouring concrete and installing hardware on a truly global scale. To give you an idea of what that looks like on the ground, let's zoom in on this massive project over in Ireland.
Intel announced a 5 billion euro, which is about 5.7 billion US dollars, capacity expansion at its Leixlip campus. Now, to put that into perspective, Intel has already invested more than 30 billion euros in Ireland since 1989, and they employ about 4,900 people there. But this brand new investment, it marks the next critical phase for what is one of their most advanced global manufacturing hubs.
Just look at these highlights. This single site in Ireland represents 30% of Intel's entire planned 2026 capital expenditure. They are upgrading existing fabrication facilities, bringing in leading-edge equipment, and building what they are literally calling AI factories. All of this is absolutely essential for delivering the Intel Xeon 6 and their next-generation processors built on that highly advanced, ultra-dense Intel 3 node. They have to do this to meet the skyrocketing demand for computing power. Moving right along to Section 3, landing tech's biggest giants, because massive buyers are needed. Look, pouring tens of billions into manufacturing is incredibly risky if you don't have locked-in demand. All this immense new capacity requires massive, massive buyers. Let's move to and see how this builds sequentially, revealing how Intel built major customer momentum back-to-back. First up, Step 1. In April 2026, Tesla selected Intel's next-generation 14A process, which, by the way, is basically their cutting-edge blueprint for making incredibly tiny, ultra-efficient chips, and Tesla is using that for its Terafab AI hub. Then, Step 2. Just 2 months later, in June, Apple agreed to work with Intel to design and build chips right here in America. So back-to-back, Intel secured massive commitments from two of the most valuable tech giants on the planet. I cannot overstate how big that Tesla win was for Intel's external foundry business. As Elon Musk stated, 14A seems like the right move, and we have a great relationship with Intel. Being chosen to actually power Tesla's Terafab AI hub down in Austin, Texas, that meant Intel secured its very first major external customer for this incredibly complex 14A technology. Huge breakthrough. And the momentum just kept accelerating. In June 2026, President Donald Trump announced that Apple had agreed to work with Intel to build its chips in America. The immediate business impact of this news was just staggering. Intel stock jumped 13% following the announcement, hitting a record $133.99. Landing Apple represents a monumental market milestone and just a huge validation for Intel's ambitious foundry strategy. Still, it's important we keep our expectations a bit grounded here. Bernstein analyst Stacy Raskin made a great point. He noted that Intel will, of course, have to prove their mettle before being granted more substantial wins. But, as he says, the first step is always the hardest, so at least they appear to be taking that step. The strategic wins are absolutely undeniable, for sure. But experts widely acknowledge that Intel now has to execute flawlessly on these massive manufacturing promises. Let's pivot to our final segment, Section 4, the future of computing and the manufacturing roadmap. We really need to look at what happens next on this highly ambitious timeline and ultimately what Wall Street's final verdict is. So let's walk through this long-term timeline together. Intel began what they call risk production, which is essentially early low-yield testing to work out the kinks of their 18A process in the second quarter of 2026. Looking a bit further out, they remain right on schedule for 14A risk production in the second half of 2027. And finally, high-volume mass manufacturing is targeted for 2028. So this shows us exactly when that $20 billion investment is expected to actually transition from factory construction to mass producing the silicon that runs the world. Now, what's really interesting about this slide is the contrast between Intel's explosive strategic comeback narrative and Wall Street's surprisingly cautious outlook. Based on a poll of 48 S&P Global analysts, the consensus rating is actually just a hold, with an average price target of $114.88, which is about 13.8% above the current price. Keep in mind, the stock actually took a short-term 4% dip right after the initial announcement, mostly because that $95 offering price was a discount from the previous close. So Wall Street clearly sees the potential, but they are absolutely waiting for pure execution before they go all in. Ultimately, this $20 billion offering is a loud, clear declaration that the company many had written off in the AI era is back, and they are betting absolutely everything on this strategy. But it leaves us with a pretty provocative question. If Intel's $20 billion AI gamble fails, who will power the future of computing? The stakes literally could not be higher, and the semiconductor industry will never be the same. Well, that wraps up our deep dive into Intel's historic turnaround. If you want to keep grasping the complexities of the semiconductor revolution, make sure to subscribe for our upcoming explainers. Until next time, keep learning.